Hello, folks. Welcome to Market Trends. This is David Russell, Global Head of Market Strategy at TradeStation. It's great to be with everyone. So we're just getting going here. Show you a few disclosures. Put a few other disclosures here into the chat. We're adding a new ETF to our list as well. If you want to look, it is the EFA, which is a global kind of benchmark. It's not hugely traded with retail investors, but it's a pretty good, essentially tracker of global markets. It follows one of the big international um, indexes. That's part Europe, part Japan, stuff like that, Australia, and things like that all mixed in. But the EFA, it's a new one we're adding. It's on the disclosures page that we shared. And here are the standardized returns. Some of these ETFs you can see here, EFA. Added to the disclosure page. So as we look overall today, I was trying to focus on some things that were kind of coming up people should know about. And it's possible that those are still things that are important, but I'm going to go ahead and jump over now. If we go to tradestation.com and you go to insights, and then you go here to, I'm going to very quickly run through these before I look at the overall market because there were some things I thought were important. So attention may shift to Nvidia, and this blog post here was basically, here we go. Let's do this way. Doing this blog post, and I wanted to kind of focus on the upcoming events because we've been very focused on the whole tariff situation for a while here. But at the same time, there are some other things that are, coming up, and I think it's important to at least have those on our radar. Because we're not going to talk again until next week. It's important just to remind people that there are other things coming up, and to at least know about those, and to have some realization that if the sentiment shifts on the geopolitical situation and the tariff situation, there are other catalysts out there. I think most importantly, next week Nvidia has its GTC conference on artificial intelligence. Now, AI, it almost seems like a long time ago that AI was a catalyst, but this is something that has the potential to be, a catalyst for stocks. And so this is a potentially very, big event. And I know attention right now is not focused on that, but if things change at any point over the weekend or anything like that, this event, which runs all of next week, including a quantum computing day on the 20th. So this event next week could be something to pay attention to. And then we have the Fed on the 19th. So, what's interesting about the Fed is that the inflation data has actually been sort of the kind of things that you'd want to see if you want to see the Fed be cutting rates. What's interesting is that the CPI was not very, was lower than expected. PPI was lower than expected. But to me, the most important thing is that shelter costs continue to come down in the CPI. That gives us an underlying structural sort of downward, disinflationary, you know, direction right now that I think we need to kind of be aware of. So things are still in a potentially good spot here, and I think we have to realize is that the probabilities, or at least the odds of a dovish sort of Fed statement next week, to a certain extent, this week has actually increased because of the inflation numbers we've seen. That sort of stuff will actually give Powell more of a sort of comfort walking in the direction of June being in play for a cut, and I think that's important. If that goes away, then we have a different sort of scenario here. But right now, we have two events next week that in a different reality, a different mindset when we're not focused on tariffs. These two events next week in another world could be positive: the GTC event from Nvidia and the Fed meeting. All right. I mentioned the CPI here. It's interesting also that there are multiple people saying that we're going to have increased recession risk because of tariffs, and we all know that. I just wanted to mention them here. It was interesting to see the airlines cutting guidance as the economy slowed. Part of the CPI that was weaker was airfares being weaker. We had kind of talked about, for example, the weakness potentially coming in cruise ships, which are all kind of part of the same industry overall. I also want to point out that there are some other little companies that were kind of jumping out that I wanted to notice. For example, Viking Therapeutics is a company that had at one point what was considered a very promising sort of. Let me actually show you the chart of these. It had what was considered a very promising weight loss drug, VKTX. And, it has struggled for about a year as people wait KTX because first of all, the drug has not yet been approved or anything, but the belief at the time was that it has this, very promising overall, narrative of this drug that people believe, is a good, outlook for. Then the weakness came because there was going to be trouble actually producing it and commercializing it. At least this is what the market's narrative was. But now there's an incremental positive of them finding a potential partner to produce it. So this is something that is a company that has, there has catalysts that are out there. They're going to start doing phase 3 trials relatively soon. So a stock like this could start getting, the sort of thing that catches people's attention again. So I want to put that on people's radar. VKTX had some interesting news in it. Okay, and then Stitch Fix. I want to just. This was also one where a company like this trades at a low, kind of multiple things like price to sales and things like that for an e-commerce company. It's had 2 quarters in a row here of gapping higher on earnings. People are starting to talk about this as a potential turnaround story. So it's just an interesting name, I think, to have on people's radar. It's not in the S&P, but it's one of these kind of companies where if it actually turns itself around with a company like this, simply by fixing their business, the potential for margin improvement could actually result in people looking for this to be better and to have put higher multiples on it and stuff like that. It's an interesting sort of name that's been left for dead for a long time, but I saw 2 interesting sort of earnings reports on it in a row. And another one was interesting was recently Zoom Info. This is, I mean, software has been a very weak part of the market, but this is a company also that has had, has people talking about potential kind of turnaround and some interesting traction in the most recent set of numbers. So I wanted to kind of point that out. And one other today that jumped up for me that is not something people know terribly well, but FN. This is a fiber optic company. It doesn't trade very much, but Amazon apparently bought some warrants to own shares in this name. So this is just another sort of FN Fabrinet. It's a fiber optic company. So it was just interesting when you see Amazon doing things like that. So all these sort of things I want to just kind of put out there. We're in a place where the overall S&P is obviously very correlated, very very volatile. But I did want to mention there are these kind of other things that are out there right now. So also interestingly, Ed Yardeni cut his S&P estimate. David Costin at Goldman, all those things. Ed Yardeni said the market needs to lower multiple and all that sort of thing. And this in many ways is what we have been focused on here to a certain extent, which is the fact is that, if you're going to trade at 21, 22 times earnings, you kind of have to be perfect. And, this sort of environment is not perfect. It has blemishes on it, and it causes a lot of sort of, there's a lot of things here that people can look at and be very concerned about. And so at this point, people just can say that, we could need a lower multiple in the overall market. And that is a reason why we're not seeing much of a bid under the market. Those are just some other points that have kind of jumped up. For me overall, though, I look at the, what I think is interesting. If you look at my overall note today, I wanted to kind of start off with the idea that people might actually, we could be near a spot here where people could be looking for the market to stabilize and potentially, kind of rebound. Now, today we did move to a new low close to 5,500, but I think it's also important to realize that the RSI went to oversold, and we're very far from things like the 50-day moving average and things like that at this moment in time. There are some potential levels here that do have some potential relevance. It's a weekly sort of level. At this point in time, I mean, I think it's important just to realize here that this could be early to be noting this, but at the same time, these events are coming next week. I'm trying to kind of help people be aware of the things that are out there that could be impacting the market. And as we look into next week, I think it's important to realize that there are these potential catalysts coming that at this point, the odds may favor those being more positive factors. So we're in a spot here where a lot of negative news is priced in, and there's a lot of things coming that might be positive. So I think that's kind of where we want to tilt the balance right now and just see, and that's what I want to do is outline these things. Now, this is our MTES workspace, and what's interesting about this is, simply looking at the trading the futures on this, when this goes up, and you can see stochastics, it did not even get overbought here, but it can still be a useful sort of signal to say, all right, stochastics are up here and they're starting to weaken and roll over, and we have basically a falling 50-hour All those sort of things, I mean, can be things that people are doing shorter term sort of positioning. This is a workspace that can kind of continue to help. So I want to just kind of point that out here. I look overall at this environment, and I think that we also have to realize there are things that it's hard to even judge them. So we have basically Trump making more kind of cavalier comments about annexing Greenland. We have Scott Bessent basically just saying like we don't really care if the market is turbulent or has a lot of volatility. Who cares if we do 200% tariffs on European alcohol, things like that. I mean, these are just the sort of things where it seems like at this point in time, whatever exactly the White House is thinking and trying to do, they're not at the point yet of wanting to communicate a degree of stopping what they're doing, and they're on this now. And so at this point in time, I think that's really where we are. And then we have the other thing of this government shutdown potential in Congress. So I think at this point we're in a spot where we've been trying to kind of hold here, but there are other sort of there's no real clear reason for people to be engaged yet. The other thing is those events I just mentioned are next week. So at this point in time, I think I wanted to kind of put those things out there and to see that there are some reasons to start to be kind of more on the optimistic side, but then at the same time, there are things that remain out there as huge unknowns at a time when multiples are still relatively high. So I think that's kind of important to realize. Now, I want to go over here and just look at some of the other things that were. Let me just make sure I'm missing anything else. Oh, I did want to actually mention next week is kind of interesting. Some of these Chinese companies report earnings next week. Now, these Chinese stocks have continued to outperform things like XPEV and Li Auto and Alibaba. A bunch of them report earnings soon. So I want to just kind of put that out there as well, is that the international trade does continue to outperform. Now, we did a trading view idea on silver recently, and we basically been looking at, I want to kind of also today mention what's happening in gold. So as we look overall, not gold, but gold miners, gold is nearing 3,000. But the thing here is the GDX gold miners is getting to a spot here where this is now, let's go to our trend line here, and we can basically see that this is now setting up for a potential, breakout. And I think it's interesting when we look at this on the weekly chart as well. This is the weekly of gold miners. And if we look at this here, we can basically see that this is, essentially it's been consolidating at this level for a long time. But now if we look back even further, like a decade ago, we can actually see that it had space to the upside. I mean, this thing used to trade well above $40. So this is GDX. And so from my perspective here, this is something people might want to be somewhat focused on, is that the current environment we're in, it does kind of continue to have a kind of win-win potential for something like gold, or at least gold miners, because if the data is essentially dovish, like I said with CPI and stuff like that, then that can lead to rate cuts, which can be good for gold. And then at the same time, if the bad sort of stuff happens, that is also potentially favorable for different geopolitical risks and things like that, government shutdown, all these sort of things, more tariff talk. Those things have been positive for gold. So right here, we're at a spot where the gold miners have this kind of high basing pattern with this. People might see it as something with breakout potential. So I want to kind of point that out. Let's look on key ETFs, because what we actually can see here, like on a year-to-date basis, the gold miners are now the top performers along with Chinese technology companies. If we look overall, we can see things like Brazil is up 10% this year, and the S&P is down 5%. This is what I mean by international. I'm going to add actually EFA to this list. You can see here EFA is up 8% year to date. So then this is kind of what I'm talking about. This is very much the anything but mega cap stock kind of mindset that is taking hold right now. All right. So I think the main thing is this is like, wait a second, I gotta let me hide myself. So this is basically an anything but American stock sort of mindset right now. People are focused on the international stuff and things like global that are of that is not going to be as positive. And what I mean by that is people talking about recession or just the uncertainty of tariffs and what it means for earnings. that's in a spot yet now where maybe we need to have the S&P go to 17 or 18 times earnings before we feel like we're getting paid to take that risk. And I think that's really the most important thing right now. All right, I mentioned the China thing. All right, so let's look now at the S&P here. This is what we do with State of the Market on Monday. We do this other webinar and we look at the indexes. But I did want to point out, because this level here now is, I think, something that might be the next one people are aware of. It's from September of last year. This was the other thing. That this is the next level I think we might want to be aware of on the chart. So you can see there is some space here on the overall weekly chart that I think people are really aware of. I'm going to flip this over to a daily here. Now, there is a 200-day moving average right up around here. And it's easier to see it on this chart. I have a lot of different charts, and I keep my levels on the trading view ones. That then if I ever have something like I change workspaces or something, I don't lose them. But basically, the levels that had kind of grabbed my attention was the low essentially on March 4th, and the low on January 13th. It kind of creates like a zone across here, and the 200-day moving average. So people looking for a test, my expectation or kind of thought was that there could be a rebound toward that level. Earlier though, I had also identified potential rebound level like on market trends on State of the Market, and we didn't reach them. So I think we have to realize here is that we are not getting any kind of significant bounces here. This was something to me that was kind of interesting, seeing the higher low yesterday. It gave a little bit of a signal that there was a potential for stability. And my view was, with the things coming like the Fed next week and GTC and everything like that, my kind of thought was maybe what we would see is something of an attempt for a rebound, and then a potential push down toward 5,400. But the closest we got was a very feeble bounce that barely didn't go anywhere. So at this point in time, I think we have to realize that this momentum is extremely sharp to the downside. And there is really, at this point, not a lot of signal on any front here of things necessarily improving. I also want to point out that, we did talk about things, go back to the weekly here. We had talked about things like XLP. We kind of said that, oh yeah, it's kind of cute. People think it's cute to be buying consumer staples. They're outperforming by 1% or something. And then look what happens. This is exactly what we said, was a risk in this sort of market, which is essentially that these kind of weird counter trend, names like consumer staples or something would suddenly just get hit. And that's what's been happening. Same thing happening now to things like real estate, just lost any kind of, benefit it was getting from the lower interest rates, and now it has this potential channel. So I did want to mention that as well. Same thing with healthcare or XLV. It had a degree of outperformance, and now just completely slamming into this level here. And again, this can now turn into a lower high with the potential for a push to a lower low. So I think right now we have to realize is that this is still a process of selling here. And there's other things I think to think about. First of all, we're in a bearish month. We're in a bearish quarter. All right, that in and of itself has the potential to simply drag us along. The next thing is there is the potential for people to be kind of negative until the tax day in April, because the thing is that obviously, well, there's a good chance people have some capital gains from the big rally in the market last year. So these things also do create some drags as we move forward here. All right. I, I, I did want to just repeat that I think if you look at the inflation numbers here, actually we're giving people reason to be, I think, kind of positive. However, that could be something that we kind of that can sit and build in the background as we're correcting. So we very well could just see continued pull to the downside on the market as positive things build up. And then we get to a spot when it's more of a decisive no-brainer buy, which is a kind of no-brainer bullish condition, which is all the bad news is priced in and the good news has been building. And we're in a spot where the market is mispriced. You can argue right now the market is not mispriced because it's still at something like 20 times earnings. But say we have weakness for another couple of months, something like that, and then we get to the spot when inflation continues to improve and maybe earnings haven't come down. Maybe the economy's not in recession. Maybe we get to a point when the market is irrationally cheap. But the thing is that at this point, you cannot necessarily argue that. So I think that's really where we are now, where people could be looking for a spot to say this is now just too irrational, and we haven't yet gotten to the spot when it really gives you a sense that that it really has a favorable overall risk reward. And I think especially with the weekend coming and the uncertainty about things like the debt seal, not the debt ceiling, but the government shutdown and all these sort of things, there's just not enough clarity right now for people to want to be taking risk. So this is the S&P 500. Now, we had talked about 55.32 as being the 50% correction, and we're kind of sitting right at it right now. But below that, I'm going to go and add that 55.32 on this chart, right? We just call that 10% correction. And then the next one down, a 20% correction would be at 49, right here, 49.18. Man, that's a 20% bear market, right? So adding those sort of levels. Okay. So I want to just kind of add that. Now, a 50% retracement of this entire move coming off the October lows would put us right around 48.20, which is coincidentally very close to our peak back in 2021. So I think we just have to realize that those sort of bigger levels kind of do remain out there, that are probably going to be on people's radar. So I want to just kind of put those back on people's kind of senses here of longer term levels to be aware of. So that's the main thing on that. Now let's look at some other actual things that might be some interesting opportunities for people looking with options, because there are some things happening here that I want to talk about, and one of them is Intel, kind of coming off the lows here. Now Intel is getting a new CEO, and this has been a real troubled story for a while. But this could be something here where a name like Intel potentially has that ability to go against the overall market. So we look at Intel here. Let me just change this. Intel. What I noticed about Intel was people might actually be looking for a potential move up kind of toward these highs or up toward kind of 28. So it's looking at, say, for example, an overall sort of positive move continues. To say the market kind of stabilizes, there's some kind of potential for Intel to move higher. Person looking at the options spread here for next week might actually realize the options expiring on the 21st. Kind of increase this, and we can see here that the 26, 28 call spread, for example, you can click on you left click on ask and then go down here to the 28s and hold down control and click on the 28s. You can see here, this is basically a $2 spread for under 20 cents. So when you look at the way that a name like Intel has been coming off the lows, and the fact that it has some potential catalyst here, and the fact that also, this is one of the names that is kind of considered potentially, favored by the current administration. I want to kind of point that out. This is one where coming off the lows here, this may have the potential to return back toward these highs. So I want to mention something like a spread like that. Now, looking at the gold miners, I looked at GDX, and overall, the actual spreads didn't seem to have maybe the strongest risk reward. But if you look at something like Newmont, NEM, this company here is one of the biggest gold miners, one of the most liquid. So NEM, a person looking in March might looking for upside in this of something like the 48.50 call spread. That call spread in a name like this goes for essentially something like 21 cents for a $2 wide spread. Now, the reason I say that is there's the Fed next week. So something like this, some of these things are in a spot where there is actually the potential for kind of bigger moves when you look at a chart like this and the Fed meeting coming. And then the other thing is, if GDX does escape and kind of continue here and start moving up into these long-term weekly levels from over a decade ago, something like Newmont here could have. I mean, this is a big chunk of GDX, so I want to just kind of point that out here. Is that right here with gold miners, the potential of breaking this long-term level. Things like NEM, people looking for upside in that could be something people look for. Now, to the downside, I've been, a lot of stocks have obviously moved lower. We were very wary. I want to point out we did a trading view idea earlier in the week on on Apple, and it's gotten really hit. It's essentially what we saw. We essentially saw the potential for it to form a falling. This was becoming a channel, and that's exactly what's happened. And we were basically targeting some of these levels. So I wanted to kind of point that out. That was what we did earlier in the week. We also did Palantir. That is also kind of one of these things that has a very high multiple. People might want to just kind of be aware of this as something that may have this potential here. It is kind of trying to hold at this level, but this is also a company that has been, um, you know, with potential weakness in software. If there is more overall selling in the market, I mean, this is one that I just want to, the more I look at it now, I have to say, my original idea, you have to change, when the facts change, you change your mind. This actually one, as I look at it now longer, I had not looked at it today. This is now more of a false breakdown. So the thing I said about Palantir, it did kind of break down as my trading view idea noted, and then it came right back. So this one here, I think maybe is not as valid. So I'm not gonna, I think you can look at this, but I want to just kind of mention that was one I had been looking at. Now, some of the others that we had talked about earlier in the week, especially Texas Instruments, which we had identified in State of the Market, we had basically noted how it was pretty high up in its range when other tech stocks were down. This was one that did definitely get dragged down. But now let's go back to IBM, because IBM here has also been very high in its range. It's interesting how it's been just standing so tall up here with everything else getting beaten down. So if people think that there is a potential for overall just more weakness in the market, something like IBM, if you look here for a move potentially down toward essentially like 230, a person here could look for a put spread in something like IBM of like the 235 down to 230. This spread now is going for something like 70 cents, or you can even move it up a little, something to 237 and a half to this one. Wait a second. 237 and a half to 232 and a half. That one's at 83 cents. It's actually kind of rebounded a little. So this is one here where if people are looking for a test back down into this gap, people might look for something like this on international business machines. Now, another thing I want to point out that I am watching here, which is something that, could potentially, just watch for a potential breakdown, is XLF here, trying to hold this level, the financials overall. They've been trying to hold this support level. And if we do continue, if we do see more overall weakness in the market, this could be something people kind of lean into on the downside. Now, some other names that were grabbing my attention that didn't necessarily have any kind of clear options, setups. One of them, for example, is AIG. AIG recently hit a multi-decade high back here. It's a property and casualty name. It used to be in the Dow, and it's been basically impervious to a lot of the weakness in the market. Property and casualty names have had this strange kind of this kind of strange ability to resist overall weakness in the market. So I did want to at least mention here, AIG is probing levels from a very long time ago. If you look at this on the weekly chart, my data doesn't even go back that far in this one. Another one that was just kind of interesting here is Pan American Silver. We did a trading view idea on, so this one, you can see essentially how it's had this pattern, and you can see here this potential trend line. We did a trading view idea yesterday on silver, and it has been challenging. This is silver futures, but basically it has been challenging some highs here. If you look at it on the weekly chart, you can basically see that silver here is pushing back towards some highs. So this is, to me, something that it's very interesting to see how tight silver has been, and it's basically on pace for one of its highest weekly closes. So I think the thing here we have to realize is that this also is pushing back to levels that we have not seen since essentially more than 10 years ago. And this may create the potential for an acceleration to the upside. Some other names that were just kind of jumping up, and we really have seen strength in metals. It's been an interesting sort of part of the market. Is that Freeport McMoran is a name here that I don't see in the immediate sort of setup, but FCX, if we look here, we're going to basically see this kind of falling trend line that it's kind of trying to break through. There's a few different ways to draw it, but I think this is one that has not yet given a confirmation. But if this were to rally kind of up above 40 and then kind of pull back and hold somewhere in the kind of $38 to $39 range, At that point, we might see the moving averages kind of turn around and give some signals on this one. But copper has been pretty strong. And I think overall, when we look at some of the news in Europe and Asia and things like that, the idea of a global recession is not really there. Either the U.S. is kind of weak. Something like Freeport and the copper names and things are something that people may actually see as a part of that trade overall. Another thing that was interesting was um, Rio, which is they do like iron ore and copper and stuff like that. JP Morgan apparently bought a hefty stake in it the other day. Um, Not really doing anything technically, but it's in a space that's been strong. So I wanted to mention that. And then another one is Harmony Gold, HMY. This was one that popped up on some of the scanners I was looking at. Also, kind of similar to overall things we're seeing in gold here, but it was interesting just to see that it's not yet broken out, but it's pushing up to these highs. So this could be one where if gold remains strong, it really hasn't gone anywhere since back here in October. So this could be something people look for it to kind of squeeze and break out. And again, something like this, you know, we're looking at levels we haven't seen in over 10 years. And I think it's important to realize gold miners overall are cheaper now than they were 10, 15 years ago. The GDX, I mean, the actual, the ETF is lower than it was, even though gold has doubled or tripled in that time. So people could be in a spot here where they actually see potential here in the gold miners. I want to just kind of mention that overall. The one last thing, it's not a highly traded name, but this Indian bank, ICICI Bank, which is IBN, is potentially setting up here. This is a major international sort of company, and you can see how it's holding this level here on 28, and it's been, in a longer term sort of uptrend. It's, the Indian stocks have been weak for a while, but this name it jumped up on my scanner here is something that just kind of was continuing to hold. Now, remember, last week we did a special sort of list of ADRs, the kind of global stocks that people might want to look at. There has been this trend toward global stocks, toward gold and silver. What we do in this webinar, Market Trends, we try to identify those trends to find those areas of relative strength. And that's kind of what we're doing here with these. Some of these names might be obscure or names people haven't thought about in a while, but some of these things like the gold miners and things like Freeport McMoran, these used to be household names. We've gotten so focused on tech and AI and stuff like that. But the fact is that those are names that people historically do have some, affinity for. So I want to just kind of put them out there. So now the market's trying to kind of claw back off these lows. This is just I think something that if we do hold here, let's just go back to the original sort of thesis or the original thing I mentioned today, which was that there is that sort of potential catalyst coming up of the Nvidia event next week and the Fed meeting next week. So if attention does shift away from the frightening things happening in Washington, there is the potential here for some catalyst coming that could have more of a positive drag on the market. So it's great to see everyone. I'll see you guys Monday in State of the Market. Take care and have a great weekend.